Bosh, how's it going everybody? My name's TradeX, this is my trading den, and today we're going to be talking about the 2 p.m. reversal, okay? For those of you who are inside Red Pill, you'll know that I have a number of models that I utilize. However, the 2 p.m. reversal is probably one of my favorites for a number of reasons. It is explosive in terms of its move, you can capture wide ranges, and the entries and exits are extremely clear cut. So if you're looking for a model to bring into your own trading plan, or you can only trade the PM session, well, if there was one model to trade, this would be it. This would be the one that I would suggest. So without further ado, let's get this intro rolling and then we'll jump straight into good stuff. See you on the other side. Let's start with what it's called, a 2 p.m. reversal. And a 2 p.m. reversal kind of gives away what it is that we're looking for. We are looking for price to reverse. If we're expecting reversal, what are we anticipating? We are anticipating aggressive displacement in the opposing direction to the initial displacement. Now, we had an example if we go back to Friday the 7th of July. We're going to break down the hallmarks of a 2 p.m. reversal, how we get in, and then targeting our exit. So first and foremost, the hallmarks that we are looking for start before 2 p.m. I'm looking for a retracement back into the AM session range, okay, to clear out some AM session liquidity. This takes place before 1 o'clock and before lunch. So it's either between 10 and 12:30, we start seeing the aggressive move commence. Okay, so we're looking for a run on liquidity during the AM session range. It can happen in two forms. It can happen like this, where we have this small range, or it can happen whereby we have an aggressive displacement during the AM session, a retracement, and then we start pegging higher going and through into lunch. Now, what we're looking for is for price to continue all the way through the lunch hour, all the way through to 2 p.m. with no major retracement. This is super key, guys. Like, this is paramount. This form and delivery of price action is key, and this is known as spooling price action. This is essentially when a price moves into a buy program and it is moving towards a predetermined price target. Okay, so price is reaching for a higher time frame target, and this is the analogy of the train. If you ever see this price action, my best piece of advice is just do not get in front of it. If you step in front of a train, you're going to get hurt. All right, and the same is true with price. If you try and short this and keep jumping on this is where you get burnt. What you do is immediately flip it on the other side and you go, okay, let's see where price is at 2 o'clock to see if we can get a 2 p.m. reversal. All right. Now, two things. Firstly, we want price to have reached a higher time frame PD array. Now, I'm not going to focus on this too much because you guys will know what higher time frame PD arrays are, but it's worth knowing that we were inside of a higher time frame premium, right? So this entire range on the daily, we were inside of a premium, so we could expect a reversal. We were also had, if we just dial into the weekly chart very, very quickly, we were operating inside of this old SIBI, okay? And as we know, we can cut through candles. So we were operating inside this in. So if we drop back down to the daily, if we look at this candle was going to the lower quad. And on the hourly, what had we done? Well, we had this 1 hour fair value gap that had been filled, right? Inside of this premium. And if we just throw on 70.5, you can see exactly where we were going into this 2 p.m. session. Okay, so we were inside this dealing range premium. We had filled this 1 hour SIBI and we were at the lower quad of the weekly SIBI. Okay, so we had confluence as to why price would want to reverse from this area. If price is literally at 2 p.m. running into and filling that fair value gap, I will often be aggressive in my entry. So I'm getting in right at the highs. I'm also looking to see if there's confluence with standard deviations. So one thing we can do is look at this range from the low to the high, and we can see if we get one-time standard deviation. And if that complies with being inside of a premium, as we've just previously mentioned, all of this, it would tie into me being hyper aggressive at 2 p.m. However, if we're just outside the 2 p.m. window, I like to see price displace, and I can show you exactly what it is I'm looking for. And guys, this is the gold to the model. What you can see is this little piece of accumulation before this manipulation move. This is a hallmark to the 2 p.m. reversal. Okay, so you get this last manipulative move out of this accumulation phase, right? What I am looking for is as follows. I'm looking for the inverted fair value gap just underneath it. Okay, this is what I'm looking for, and this is what I've back tested, and this is what my strategy revolves around. Okay, so this is an inverted fair value gap. Got a big R on that. This becomes your entry. Okay, and if this coincides with being at the 2 p.m. macro, guess what? You're in the sweet spot, right? And when did price eventually break this inverted fair value gap? Bang on the 2 p.m. macro. So this is where I would be piling in short. Now you've got in. How on earth X do I get out of this? Okay, well, this is where we start peeling off our exits, all right? So what I'll be looking at, I'm looking at, first and foremost, the entire range from the low to the high. I'm looking for equilibrium of the range. This would be my first target, right? This is my first partial, all right? So if I'm getting in a trade and I'm looking at my my trade entry, my trade exit, this is what I'm starting to look at. What do we know? Secondly, what do we know price is going to do once it's fulfilled its objectives in a higher time frame? Well, it's going to go and run for the nearest breaker block. If we just drop onto the 5 minute, this is how I like to do it, just to get a very, very clear indication of where we are. Now, this candle right here is a breaker block, right? So this is a 5 minute breaker. We have the low, the high, the lower low, and then finally broken through. This validates this as a breaker. Okay, so what I then do is jump down to 1 minute, and I just dial it into the highest up close candle with inside of that 5 minute. Okay, and so this would be where I then would be looking to take the partial. So you can take the low of that breaker, you can take the high of the breaker. And my next logical partial would be the low of this breaker block. Okay, so what I'm actually going to do is just clone this, just for ease, and put this on the low of this breaker block. This would be the next place I take partial. Once that has taken place, you can look for PD arrays inside of a discount. What I normally do is take off my lion's share, my lion's portion of my trade in this range. And at this stage, I'm purely holding runners. What are we looking for? Okay, well, here's a couple of nuances. If the Asia low has not been taken before 2 p.m., then I'll be targeting the Asia low. Okay, so my runners would be all the way down at the Asia low. But as you can see, London took the Asia low, and then New York took the London low. So my preference would be to look to take a PD array inside of this OTE. All right, so what I'll be looking at here is a potential return to origin, which is this hourly order block, which we have right here, which we have delineated right here. This move would have delivered you, if you got in on this implied inverted fair value gap, you would have taken 26 handles, okay, if you just took it down to that low. Very nice trade indeed. The key is, can you stay patient through all of this if you are not in on at the right side? So if you, for example, if you haven't taken this long and every time you're trying to short this, can you stay patient and wait for a setup to form and wait for your 2 p.m. macro reversal? That is the key, okay? Because what happens is a lot of people, they'll get burnt in this, trying to jump on this early, trying to step in front of that train to short it. The professional trader will take a step back and they'll go, okay, let's see what happens at 2 p.m. And if price breaks down, we look for the inverted fair value gap. That's where we take our trade. That's when we get the aggressive move, okay? Now, there is one other variation. I just wanted to bring this in. So this is from my study journals. What we're looking for in this variation is an aggressive move during the AM session, okay? So in this instance, the previous example, you can see that we didn't necessarily have the aggressive displacement during the AM. It was quite meager. But what we have in this example is aggressive displacement, right? We get a retracement going into the lunch hour, and this creates the lunch lows. Then we get that spalling price action, again, before 1 o'clock with no major retracement. In this instance, it was bang on 2 o'clock. We ran into an hourly order block. This was our PD array at 2, aggressive displacement. Then we see what we're waiting for, fair value gap at the highs, the previous high made during the AM session. So if price breaks down at this high pre-lunch, this is where we're searching for the fair value gap to form. So in the previous example, this previous high was nowhere to be seen. Okay, and we were using the inverted fair value gap underneath that consolidation before the manipulation and the breakdown. In this example, we're not looking for that. We're just looking for this AM session high and then for price to break down and leave a fair value gap, which turns into an inverted fair value gap around that pre-lunch high. And the same premises applies, right? So you'd be searching for the nearest breaker block, equilibrium of the range, targeting lunch lows, and then if the Asia low hasn't been taken, you'd be looking for price to run the Asia low. There you have it, guys. There's a 2 p.m. reversal. For those of you who stayed to the end, I'll put a little bonus in this. I'll put in the show notes below a PDF in time with exactly how to trade the 2 p.m. reversal, so you can go away and study this at your leisure. It's a little tidbit or a snippet in terms of what we do inside of Red Pill University, which is inside of the Red Pill Discord, okay, which is a private Discord. And if you'd like to join, hit up my links below in the comment section and you guys can still join, all right? And if you do, then I look forward to welcoming you on the other side where I trade live every single day. So until next time, trade safe, trade smart, and I'll see you on the next episode. Take care.